Good morning, everyone. This is Financial Literacy 101, and today we'll be breaking down Cinedigm. I believe that this stock already will be blowing up in the next 3 to 6 months, and it's probably best for you guys to start investing today. All right, guys, let's get into the review. I don't want to waste a lot of you guys' time because the market is hot right now. The market is hot. We're going to start looking at Cinedigm. Again, this stock is going to be very, very valuable for video streaming. And I'm going to try to break down to my best ability why I believe that you guys should absolutely get into this stock. Okay, give me 1 second here. So I'm sharing my screen. All right. So as we're looking at this particular stock, now, first and foremost, I'm going to show you that I definitely invested inside this stock. Okay, and I'm going to go ahead and put this $4 that I have just lingering here inside the stock as well. And you'll see the amount of shares that I've already purchased over the weekend. So when the market came hot, I already have an investment inside of this particular stock. But see, in the past 5 years, Cinedigm has been performing at 42%. The past year, 306% Cinedigm has been performing. The past 3 months, around 81%. The past month, around 5.5%, well, around 6%. The past week, 3.3%. And then today, Cinedigm is already up 2.2%. So there's money to be made already if you guys start to begin to invest as we speak. Okay. Now, moving right along, as you can tell, ladies and gentlemen, I've already bought 100. Let me blow this up. I've already purchased 110 shares of Cinedigm, which is 0.57% of my portfolio. My today's return is fluctuating as the market is live. The cost for me is $149, so roughly $150 here. And my market value is already up to $151. I'm making dimes on the dollar, if not pennies, okay? Let's move right along. So for you guys who are not familiar with Cinedigm, one of my subscribers actually brought this stock to my attention. So believe me, I read 99% of my comments. I read 99% of how people communicate through, communicate with me through Instagram as well as Facebook. So I'm reading all you guys' texts and messages. So believe me, I do not ignore my subscribers. Okay, to my best of my ability, 99% of your information is being read and also analyzed. Cinedigm Corp engages in the marketing and distribution of movie, television, and other short-form content, managing a library of distribution rights. It operates through the segments, cinema equipment business, and content and entertainment business. The cinema equipment business segment consists of the non-recourse financing vehicles and administrators. The content and entertainment business refers to ancillary market aggregation and distribution of entertainment content and branded over the top digital network business providing entertainment channels and applications. The company was founded by Dale Mayo on March 31st of 2000. It's headquartered in New York, New York. And the listed name on the common stock is CIDM. That is the ticker. That is the symbol. Okay. So again, this company is around 21 years old, and they mostly deal in streaming media. And we're going to get why this stock is very important to your stock portfolio, especially for you guys who are looking for stocks that are under 10 and under $5 per share. And again, as you can tell, all the history that I have listed of all the transactions I made in the past weekend. So currently right here, you see I bought 100 shares at $1.36 per share. And then again, I bought another 10 shares, roughly 7.3 and 2.8. So that's around 10 extra 10 shares. And people who are all also in this segment is Genius Brand, Casa Maritime, Zoomedica, and Global Star. Okay, let's move right along. All right. So we know year to date, which really brings down this percentage right here, has been their performance in the past 5 years. So when I go back to Robinhood and I look at, what has occurred with this particular company to make them more valuable, within I'm looking at, is that the 5-year mark, they was actually down 43%. But as we can tell, the last year, they've been up roughly 370%. But year to date, they've only been up 112%. That's because initially they was not doing that well. But as you can see, currently they're doing very, very well year to date the last year, as well as the past 3 months. Okay, we understand that the market has had some sort of correction, and that is why you see that 28.27%. Now, everywhere that I have looked, okay, let's keep this perspective strong. Everywhere that I have looked, every analyst, every website is saying this stock is going to at least reach $3 a share. I want you to think about that. $3 a share, $3.50 per share. So if you get in now at $1.37 per share, you're going to double your money. You're going to double your money. Now, nothing is 100% certainty, but when you have different analysts on different platforms, all speaking the same language, it's a 99% chance, in my opinion, that this stock is going to reach at least $3 per share, if not $5 a share. So what else is important here? The EPS, they're slightly operating out of debt, no big deal. The analyst rating on MarketWatch here is a buy rating. Okay? Let's move right along. The analysts on Yahoo are all saying that for short term and long term, that the stock will go up. They do say anywhere from 6 weeks to 9 months that the stock is going to move laterally, it's going to move sideways. But nonetheless, ladies and gentlemen, this is a good brand. This is a good stock that should be, maybe anywhere from 5 to 10% of your portfolio. There is some risk with this stock, but the risk doesn't look like much. If I had to give it a risk factor, I give it a risk factor of 5 out of 10. Only because there's some uncertainty with this particular stock because it's under the $5 mark. But nonetheless, again, I must tell you that everyone is banking on the stock that is going to perform very, very well here in the next 3 to 6 months. Other stocks that people are also looking at in adjacent with Cinedigm is Visalink Technologies, Genius Brand, Express Spa, Remark, also known as Mark, and BioLays. Okay, let me move along. Now, there's no rating on Zacks. Okay, just to let you know, unfortunately, there's no rating on Zacks. But I can tell you right now, this is a strong buy. So your question probably is, what makes this stock so important for you to buy right now? So important for you to invest 100, 200 so you can get, quite a bit of shares so you can triple and double your money. Well, this right here should kind of be one of the pieces of information I give you here today that should sway the way you think about this particular stock, not knowing much of it in the first place. So here are the partners of Cinedigm. And it reads here, not to insult your intelligence, Cinedigm established relationships with premier digital, television, retail, cinema. So again, premier digital, television, retail, cinema, and content partners support an infrastructure that makes it possible to launch and scale China quickly and cost effectively. So again, they're in partnership with Comcast, DirecTV, Google, Hulu, iTunes, Netflix, Prime Video, Showtime, Starz, Vudu, all the large names in television today. Especially when it comes to Comcast and DirecTV, we understand that Comcast is not doing as well as they once was because of like YouTube TV, Netflix, Hulu, all these streaming platforms that solely operate on the internet and not from a cable or satellite service. And that's why you see Comcast and DirecTV moving the pendulum, and also HBO Max on streaming services because no one is doing traditional cable anymore. There's very, very few people out there with traditional cable. Everybody's moving to streaming media. Now on the retail side, who's essentially they're hustlers, Amazon, Best Buy, Redbox, Target, and as well as Walmart. Then you have the movie side of Cinedigm in partnership. Look who they have. They have all the large name in movies. They have 20th Century Fox, Regal Cinemas, Warner Brothers, Universal, Sony Pictures, Marcus Theaters, AMC, Cinemark, Disney, Cinema Buying Group, etc. Okay, so this would make already this stock like liquid gold when it comes to streaming media. Then they have the content partners. Okay, they have the NFL Network, New Kingdom, Shout, The Asylum. What else is important here? 4K Media, that company is coming along. NHL, for you guys who watch that as well. So again, this company is very, very profitable. And of course, and many, many more. Okay. So if you guys are not thinking about investing in this company, I'm gonna tell you right now, when I come back on here, just like I did NEO, just like I did a few other stocks that I've given you the information on, when I come back on here and I'm up 20, 30, 40% on the stock, I'm definitely going to tell you I told you so. Do I have any special interest in the stock? No. I just believe that some of the stocks that people give me, and I researched myself, and when I come to the numbers, this one right here, it's a no-brainer for me. And that's why I went in and I deposited $100 and some odd to accumulate 100. I think I roughly have 110 shares. Let me look at this very quickly. Yeah, I have 110 shares for you guys who want to know. I am invested in this stock currently right now. I see that I have Money King. It says Cinedigm stock is going to do very well. They set their self up to beat on future earnings with the companies they just bought at least. That's what the CEO said. Okay. All right, let's see any other information. I just wanted to run this past you guys, the information that I found out. Let's see here. As you can tell, this information is coming from moneycnn.com. That's moneycnn.com. And basically said a 12-month price forecast for Cinedigm Corp have a medium target of $3.25 with a high estimate of $3.50 and a low estimate of $3. Okay. So let's just go with the medium target of $3.25. Right now, the stock is $1.35. I'll move on. This is coming from the Investor Observer. It says Cinedigm has an average analyst recommendation of a strong buy. The company has an average price target of what? $3.25. Okay. This analyst rating is coming from stockinvest.us. That is stockinvest.us. And it says the benchmark is very positive to Cinedigm and gave it a buy rating. The price target is $3.50. So what we see consistently, people, is that this stock is going to at least reach $3.25 a share. And this stock is not that well known. One of my subscribers, I think it was Money King here, who gave this to my attention, and I had to do the research over the weekend. Let's move on. Now, this is from Investor Place. As you can tell, it says Cinedigm stock remains cheap despite the company's rapid growth. I'm not going to get into the story here, but this news, this headline is very powerful, is very important to your stock portfolio. Okay. Thank you. It's very important to your stock portfolio. And I've been reading all of the news and segments and how this stock is not underperforming, it's overperforming, and that they're just essentially waiting for the stock price to rise, for investors to be more educated, for the stock to get more publicity. And again, it says here, coming from the SEC, it said that it defines this as a stock that trades under $5 per share. Today, it trades at $1.29, but we understand today is actually at $1.34, $1.37 per share. And all of these people are in cahoots, basically saying that this stock is going to reach at least $3 per share. Now, here's some other just fun information about Cinedigm, because I want to see what is Cinedigm doing as far as innovation and growing. It says here that through Access Wire, that Cinedigm today announces 2 of the company streaming channels. You got Con TV that does an anime, and My Time Movie Network says have officially launched on Vizio Smartcast, the award-winning smart TV platform available to millions of viewers. Okay, millions of viewers. So basically, ladies and gentlemen, that's the information that I have for you guys today. I believe that you absolutely should invest. I'm going to give Cinedigm a 4 flame rating. I'm heavily invested in the stock. I'm also thinking about investing another $100 in Cinedigm. I want to look very quickly at my total portfolio. I'm trying to build it back up after I lost a great deal. Currently, I'm down $100 today. I can show you guys this. Currently, I'm down $100 today. But I am looking to build this back up nonetheless. As you can tell, I still have some options that are underperforming. And I'm really concerned about my AMD. AMD is not performing the way that I thought it would, but that's okay. As a matter of fact, I'm because this one is probably what, 3 weeks from now. Let me just currently look at this one very quickly. Yeah, I probably, yeah. The market value is $13. So if I cash this in, I'm going to lose out, ladies and gentlemen, on $382 odd. So at this point, I'm just going to ride the wave. I don't think AMD will reach 120 by April 16th. Anything's possible, but I doubt it. I'm just going to count this as a loss. That $400 I'll have to count as a loss. But when it comes to my other 2 options with GE and NEO, NEO was on a trajectory of reaching $50 per share, but they're currently down at $43 per share. But I have until June. So I have quite some time to make back on this particular option, as well as GE at $14 a share. And I think they retracted down to, they retracted down to $13 a share. So they can definitely bounce back until June. Okay. So there you have it, ladies and gentlemen. This is Financial Literacy 101. Learn money and be inspired. You guys have a great and wonderful day. And I'll see you guys on the next one. I'm out.